Hello from the Dukascopy TV studio in Geneva. We're talking about developments in the commodity trading industry and the effect of shipping rates with Richard Watts. He's Director of HR Maritime. Welcome to the studio, Richard.
Thank you.
So the shipping rates are at a historical low. How does this affect the commodity trading industry?
Well, whenever we're looking at shipping, we need to think about, we're looking at a very, very big industry. We're looking at an industry that has many, many different areas. So we're talking about different sizes of ships. We're talking about different types of commodity that are being shipped. We're talking about container. We're talking about tanker. We're talking about dry bulk shipping. In terms of the sizes, we're talking about vessels that can transport 10,000 tons up to vessels that can transport 400,000 tons. And geographical regions, we're talking about either concentrated in Europe, in Africa, in Asia, or the place in between these different regions. So if we're going to look at it in detail, then if we look down into different sectors, if we look at, for example, the dry bulk sector, then we can look at the Baltic Exchange Index, and this shows effectively the dry bulk rates over the last 3 months. So here we have 3 lines on this graph. The 3 lines, first of all, starting in the bottom left, is the Cape size. These are for the largest vessels that are transporting goods for dry cargo. These are about 150,000 tons and mainly dealing with iron ore and coal. And so as you can see, there's quite a lot of fluctuation over the last 3 months and been quite a bit of movement. Now, moving on, we also have the Panamax rates. These are the largest vessels that can ship through the Panama Canal, about 80,000 tons of cargo. And that's the other green line, which is starting in the top left of the screen. And so what we can see, while one of the rates is going down, the other is going up at the same time. And finally, in pink, we have the Handysize rates. These are really the workhorses of the industry. They carry 20 to 50,000 tons of cargo. And these rates, as you can see, they're fluctuating a bit, but they don't tend to fluctuate as much because they are much more flexible. There are many different types of cargo that they can transport and different ports where they can operate. Now, if we look a little bit further back, if we look actually over the last 10 years, we can see that it is a market that moves very, very, very quickly. And so we can see that running up to 2007, we can see a gradual increase, and then it started spiking in 2008. This is when the world economy was overheating, and we can see the crash that happened towards the end of 2008. This represented the vessels, the Cape-size vessels, 150,000 tons of cargo, going from earning $200,000 a day to earning about $5,000 per day. So ship owners were very heavily hit, and then we've had different movements over the last couple of years, but at the moment we are at historic lows for the freight rates. And just to round it off, if we also look at the tanker markets, again in the tanker markets, it's a big, big market. First of all, it's split into 2 sectors. The top line is the clean product tankers, so these are basically refined petroleum products. And the bottom line is the dirty product market, and so these are crude tankers. And as we can see again, they're not moving in harmony. They're moving at different directions at different times, and so it's very, very difficult to talk about the market as a whole. But what we can agree on is that the whole market, certainly the dry cargo market, is at historic lows.
So what does this mean now for the shipping industry?
Well, for the shipping industry, it's quite difficult. The ship owners are certainly not earning enough to operate their vessels. We're seeing various problems. We're seeing ship owners which are in financial difficulties. Shipping companies which have been around for many, many years, 60, 70 years, are suddenly going bankrupt. And so they are operating these vessels. They still have to pay their fixed costs. They have to pay all the different costs associated with the vessel, but they're not earning sufficient income. We're seeing more scrapping of vessels. We're seeing vessels which are coming out of dry dock, and they've just been constructed and they're being scrapped immediately. And so for the ship owners, these are very, very difficult times. But it'd be interesting to see what does happen over the next couple of years, because we see a lot of hedge funds who are moving into the market. They're putting money into the market. They're buying vessels because they see it as a cyclical market, and they're convinced that the rates are going to turn around.
So if we look to the commodity industry, what does it mean for this industry? Can they actually benefit from the low shipping rates?
Well, it's interesting because it's all very, very closely connected, obviously, because the only reason that we do have ships is to transport goods. And so the demand for shipping is a derived demand. and it's derived from the demand for the goods that are being transported. So first of all, the trading companies, yes, they can benefit from historical low shipping rates, and so you think that they would be able to be shipping fantastic quantities of cargo. The problem is that one of the reasons why the shipping rates are so low is because the demand is low, and the trade is simply not there. And so they don't have the trade to be able to take advantage of these rates, and also they have to be very, very careful of the risk of counterparty default, because it's all fair and well to get a fantastic shipping rate to transport your cargo for an incredibly low price, and halfway through the voyage the ship owner goes bankrupt and you find yourself with your cargo on board a vessel and you have no counterparty, and then you have to deal with the creditors of the vessel, and this has happened recently to a number of companies.
Thank you very much. So you already mentioned that hedge funds are going into the shipping market because it is seen as a cyclical market. So what's the time frame now when we can expect maybe a normalization of these prices? What do you think?
Unfortunately, that's the golden question. That's the question everyone's trying to ask. In the shipping markets, it is a cyclical market. The problem is you have multiple cycles running at the same time. And so you have long-term cycles, short-term cycles, and with the different sectors, it's almost impossible to predict. One thing that is clear, that there are some incredibly good bargains to be had with vessels at the moment to purchase them, and there's quite a lot of money floating around which doesn't really have a home at the moment. With returns so low, people are looking for any opportunity to earn more money, and so it is an opportunity to buy up these vessels, but a lot of people don't seem to realise that owning a vessel doesn't just mean buying it, you also have to operate it, and that's very complicated.
And so you will observe this situation with your company HR Maritime in Geneva. Geneva is one of the hubs for commodity trading. Actually, can you give us a quick outline what is happening in the commodity trading scene here in Geneva in the next months?
Well, we are seeing more and more events being held in Geneva. I mean, Geneva is established as a major commodity trading hub, and so we're seeing different events which are focused on the industry. We've just had Cereals Europe, which was last week, and so that was gathering a lot of the cereal traders. We have Global Energy and Global Grain, which are part of the established Geneva calendar, which are held once a year. And coming up in June, we have the Marine Money Conference, which is focusing more on the finance side of shipping and trading. And also in the Propeller Club, which is uniting people working in trading and shipping, we'll be holding the 30th anniversary party in mid-June. And so there are more and more events which are bringing people together and allowing networking opportunities.
Thank you very much, Richard Watts, for being here today.
Thank you.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.